ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, first day of February 2022. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you're joining via our YouTube channel, youtube.com/CFRN, we're certainly glad you're there, but keep in mind I am not able to monitor the chat box on the YouTube channel because I have my eyes on the question box on our own go-to platform. So, if you would like to join the show each day in a manner that allows you to ask questions and participate in the discussion, there's a process that you only have to do one time. Go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It gives you access to the chat box so that you can ask questions and participate in the discussion. In fact, if you're listening live right now via YouTube, it's not too late to do that process and just log right in. Now, the way it works is you get an email every day going forward after you do that process one time. You get an email right before the show starts, reminding you the show's about to start. And when you're ready to join the show with full access to the question box, all you have to do is click the link in the email, and you're in like Flynn. One-click access each and every day. Of course, there's going to be days you're out of the office, away from the desktop, and you still want to join the show, so all you do is go to our YouTube channel, youtube.com/CFRN. Not only do we broadcast live each and every day, but we also archive each and every daily broadcast. Currently, there are over 1,800 daily live broadcasts archived for your educational and viewing pleasure. So before we go to the charts and the numbers, let's open with a word of prayer. Today we're going to pray about developing consistency of character. Galatians 5:22 says, "The fruit of the Spirit is love, joy, peace, forbearance, kindness, goodness, faithfulness, gentleness, and self-control." That's a lot of fruit. However, we all are guilty of this, but maybe you're not. I don't want to accuse you, but I'm guilty. I know. Sometimes we behave one way around certain people, and we behave another way around other people. Have you ever caught yourself acting differently around one person than another? Now, some people in your life share your passion for Jesus. But do we talk about him with as much gusto around those who may be uncomfortable or unfamiliar with him? Do we behave the same in front of a believer as we do a non-believer? That's really the question. So, what makes us shapeshift like this? To fit ourselves to what we deem is acceptable behavior around specific people, instead of adopting a consistency of character around everyone. Honesty includes consistency of character. Paul wrote to the Galatians about the fruit of the Spirit. He wrote to the Ephesians about the armor of God. Consistency of character results in a humble submission of our lives to Christ. In putting on the armor of God daily, we get to experience the fruit of the Spirit flowing through us in Christ. Each day, we wake up to a life that carries a divine purpose. But we can miss it if we neglect to let go and let God. As Christ followers, we get to prey on His armor, experience His fruit, and participate in His kingdom. We are God's family. Christ calls us His friends. The Spirit of God lives in every Christ follower. We are already enough when we wake up in the morning. So let's be diligent about reminding ourselves. The next generations are watching to witness Christ's love through us, just as we did from those before us. That last video I played, if you were tuned in early, before the show actually started, the guy singing and who wrote the song was talking about how his mother used to pray by her bedside every night. I grew up watching not only my mother, but my grandmother pray every night, my grandmother out loud, before she went to bed. And that made an incredible impression on who I am today. Many mothers, grandmothers are raising their children's today because we've got a generation that's somehow gone astray. And so I'm so thankful that I had a praying mother. I'm so thankful that I had a praying grandmother. The question is what legacy will we leave for the next generation, for our children, for our grandchildren, for our children's children's children? That's a big question. It's a big responsibility. Remember, the next generations are watching to witness Christ's love through us, just as we did from those before us. Heavenly Father, your love for us is amazing. Only you know the number of our days and the purpose you have for us. You teach us in the most amazing ways, through the most unexpected circumstances. Develop a consistency of character in us, an authentic honesty about who and whose we are, evident to those around us, no matter who they are, believer or non-believer. Spirit of God, thank you for equipping us with gifts you are ever developing in us. God, protect us with your armor as we walk through each day. Give us wisdom to discern the whispering lies and manipulative tactics of our enemies, and take our thoughts captive to you, author of life. Jesus, our Savior, thank you for your sacrifice that you made on the cross for each and every one of us. By defeating death, you made it possible for us to experience forgiveness, grace, mercy, and eternal life. You died so we may live our lives to the fullest, more abundant, as you said, and join you in heaven for eternity. It's with this daily perspective we wish to walk through our days on earth with a hope that cannot be crushed or thwarted. Help us embrace the peace we have in you. Help us to be consistently bold in speaking of you, no matter what company we're in, no matter what group we're around, no matter what people we're hanging out with. In Jesus' name we pray. Amen.
Amen.
Hey, and amen. All right, guys, let me give you the numbers from around the world. These are the cash markets, or the indices as they're called. Let me refresh my data here. There we go. All right, we'll start out here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is down 11 points. NASDAQ is down 6.5. S&P 500 is down 3. But our man in the street, the Russell 2000, is up 18 points. And for the Russell, that's almost 1%. In the commodity basket, crude oil down 22 cents, trading 87.93 last. Gold up $7.50, trading 1803.80 last. Silver up 28 cents. Go silver. Trading 22.67 last. That's a gain of a little over 1.25%. And if you're trading futures, that translates into a little over, it's almost $1,300 per contract traded. In the Asian markets at the close, the Nikkei posted a gain of 76 points. The Shanghai lost 32. The Hang Seng gained 252 points. That's that's actually a little over 1%. And in the European markets at the close, FTSE posted a gain of 71 points, 1%. The DAX rose 148 points, 1%. The CAC rose 100 points, just over 100 points, which for the CAC is a gain of almost 1.5%. So that gives us a mixed day in Asia. It was a solid green day in the UK. And everything has gone green here in the US. We've got the Dow, the NASDAQ, the S&P, and the Russell 2000 all in the green. Now the Dow, NASDAQ, S&P are barely in the green, but the Russell is solidly in the green, up almost 1% on the session. So with that, we'll go to Michael, get a recap of everything that happened this morning in the live training room. After that, I'll come back. We'll look at the Logic 247 alerts, the Concierge Trade alerts, and if you have a question at any point during the broadcast, just type it into the chat box. We're always happy to answer your questions, and nobody sees what you type except myself, Michael, Valerie, and Bert when he's here. So, Michael, it's all yours.
Okay, I'm bringing it over. There we go.
All right. I can see it all. Let me hit mute on my end, and I'll be here when you're done.
Excellent. Thank you. Here we go. Good afternoon, everyone. Let's see. If you have not taken a free trial with us and you want to take a free trial with us, go here to eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. You can tell us to be a straight and challenge so we can tailor one-on-one training just for you. hit the send button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay. Once you click on the confirmation link, you will be sent an email, a confirmation email. Well, once you do that, you send everything you need to get into the room. Sorry, I just got distracted. That's all you have to do, right? Fill this out, hit send, you get a confirmation link, hit that, and you'll be sent all the information you need to get into the room. All right, so it's the first day of February, start of a new month, right? And I think I got the whole spreadsheet working out. So we ended last month with $16,426 a contract, averaging $821 per contract per day. This month we're starting off a little bit slower. If you're going to read the spreadsheet, you got to read all CFTC risk disclosures down at the bottom. Today we made 75 ticks on the YM, 4 ticks in crude, 3 ticks in gold, and we didn't trade the ES again. And today took 13 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 32 trades this morning. So on the first day of the month, we're up $445. One day, $445. We've now gone 124 days since our last down day, and we've gotten our goal for the day every day so far this year, 21 out of 21 days. Now, these numbers in here, this needs to be equals that. Okay, this needs to be 0 right now, or something. Okay, so down here, now I was trying to get all this stuff together. I did have it together for January. Okay, so our average for January, I just had this right a minute ago. Anyway, this number, hang on. Let's do that. Hang on, sorry, I'm doing this all in front of you. I thought I had this right, and I had to make one change. And then that change ended up being this equals that divided by that. Okay, there we go. That is correct. So on the year now, we're up $16,871, and we're averaging $803.39 per day. Okay, we're gone 21 business days on the year. Okay, and for the month of January, we worked only 3 hours in the month of January, and we averaged $799 per contract per 2-hour trading day. Actually, per contract. No, sorry. We averaged $799 per hour. Right? We worked 3 hours and 3.05 hours and averaged $799 per hour in the month of January. Okay, so let's get into what actually happened. All right, now the ES was messed up in the DOM again, so I didn't do anything with the ES. It was having issues here with the BBC most of the morning anyway. The BBC was either holding it down or just causing a consolidation in there. So we traded the YM. Now we had most of our trades on the YM, so I'm going to end with the YM. All right, I'm going to start out over here with gold. Now again, you guys see I have this paint bar indicator on here that shows when the MA1 in the cycle are the same color. Okay, so you can see the trade setups, how they came together. And when you have a trade setup developing, you can see which ones have the highest probability, easily see which ones have the highest probability and which ones do not. All right, so we started out in gold. Right here, we missed a trade. That would have been the goal for the day if we'd have gotten it, but we grabbed this one instead and it stopped us out. So we're -8 at that point. Then we picked up 2 ticks here to get us to -6. Then looks like I missed a trade right here. Missed a trade there, missed a trade there, missed a trade there. And finally over here, I got another trade. On this one, it looks like I picked up 2 ticks on the first one to get me to -4, 5 ticks on the next one to get me to -3. Then I had a break even. Then it looks like I missed a trade right there. Got a break even there. Picked up 2 more ticks there to get me to +3. This last one that was +5 got me to +1. So this +2 got me to +3, and then I had a break even right there. Okay, and that was it for the room. Now during the break, there was 1 trade right here during the break, a short trade right there, and 1 more short trade right here during the break. Actually, there was 1 more right here too. So there are 3 short trades during the break. Okay, now crude oil. Let's go back. We took a few trades here on crude, not too many. During the break, it looks like it had some nice movement though. Reminder, tomorrow we have crude inventories coming out. Okay, let me get all the way back. All the way back here. Okay, so this was our first trade on crude. We ended up with a break even on this one. I should have had a little bit of profit locked in, but I wasn't paying attention to it. I was happy to get the break even. I missed this bounce off the BBC right here. This is your highest probability trade when it's the right color bouncing off the BBC. Okay, we had a break even right there. Then over here, yeah, somewhere in here, I missed a trade here because we got our goal for the day on one of these. It was after, what did I say, 13 minutes. So I'm thinking it was right in here where we got our goal for the day. No, it was a short trade. It was probably, no, it wasn't there. I don't know where it was. It was after 13 minutes and it was, oh, it was on the YM. That's why I'm having trouble here. Okay, so in crude, somewhere we ended up with +2 and then we ended up with 2 more to get to +4 on the day. All right, there it was over here. So we had +2 on that one back there, a couple of break-even trades right here. We had another +2 to get us to +4. And then I was showing all these things, but you know the cycle started moving down, so I didn't do it. And then I had to do a cycle reset. It went up there, and then it didn't follow through on the cycle reset, and it turned around. And I didn't write this one down, whatever this was. It looks like it was only a couple of ticks, but I didn't write that one down. And that was at the end of the session. During the break, it looks like there was a short right there and there and here. And I would say there and there and there. And long trade there that would have been a break even. And not really much else in here. And that was it. Well, I mean, that was plenty anyway during the break. Okay, that was crude. We ended up with +4 on crude. Now the YM, this is where we got our goal for the day. Okay, let me go all the way back here. That was it right there. Okay, now I originally started out with the ES up, and I wasn't looking at the YM, but then I saw the ES down was still a little messed up, so I just went right to the YM. This was our first trade here on the YM, and I picked up 20 ticks on the first trade, 10 ticks on the next trade. That put me at +30. Then I stopped out, put me back down to +14. But this is where we got the goal for the day on this one. All right, then I stopped out here, and I was at +14 at that point. And then I got 10 ticks there, put me at +24. Then missed a trade here, and got a break even there, a break even there. Looks like I missed a trade in here, right here. I got 16 ticks on that to get me to +40. And break even. 10 ticks there to get me to +50. Then missed a trade. Break even, break even. 20 ticks there to get me to +70. Then I stopped out, back down to 54. Break even. Then another break even. I missed a couple of trades in here. It looks like there was one there that I missed and one here that I missed. Both nice trades. Then missed a trade there, and right in here, it looks like there was a trade right here that ended up working out. It took it a few minutes though. But I went from +54 up to 64, so I picked up 10 there. And then another 10 there to get me to 74. And you can see I missed a couple of trades and one tick there to get me to 75. And then we get into the break here. There was one more trade right here at the end that I didn't get. And let's see what happened during the break. Well, there was a short right in there. A whole bunch of gobbledygook. And another short right there. And a long right there during the break. It's got another short sitting up right now. Okay. So that was it today. Now let me go back to here. Okay, the spreadsheet. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the second day of February 2022. We made 75 ticks in the YM, 4 ticks in crude, 3 ticks on gold, and we didn't trade the ES. It was only at plus $445 a contract this morning. Today it took 13 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 32 trades. So on the month, we're at $445. That's over 1 trading day, averaging $445 per contract per 2-hour trading day. We've now gone 124 consecutive days of getting our goal, or 124 consecutive days of since our last down day. Okay, and 21 out of 21 so far this year. So now on the year, we are at, here I can make that bold and a little bigger now. I think it's right. We are at $16,871 on the year. That's over 21 trading days, averaging $803 per contract per 2-hour trading day. There. Okay. Averaging $803 per contract per 2-hour trading day. I think I'm going to do that over here. There. That's better. Okay. Oh, I got rid of the blue. Oh, I'll get to that. Anyway, I'm not counting today. If you were to quit when you got your goal for the day for the month of January, you would have worked a total of 3 hours in the month of January and averaged $799 per hour for the month of January. Okay. All right, back here. Now, if you have not taken a free trial with us and you want to, go here to eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. You can tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click that link, you don't get the free trial, right? Make sure you click on that link. All right, that's it, guys. With that, I'm going to pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready.
Excellent.
Here we go.
Okay, I can see your stuff.
Recap of the recap.
13 minutes, 2 trades, $100 a contract.
Good job.
Thank you.
Okay, guys, if you want to see what Michael just recapped, if you want to see that live in real time every single day, all you have to do is do what he just said and go to eminitrainingschool.com. If you've never taken a free trial, there's only 2 free trials per lifetime, and they must be 6 months apart. But if you've never taken the trial, it's really simple. Just go to eminitrainingschool.com, and you'll be able to not only watch what Michael's doing or Valerie during the first 2 hours of the trading day of the Wall Street day, but you'll also be provided with a demo platform so that you can trade along in the simulator, because as Michael or Valerie are putting on and taking off trades, they're explaining the setup, they're explaining every move they make, every trade they take, the rule behind it. It's very much rules-based trading, and it's very important that you learn that mechanical model before you start to explore the world of discretionary trading. So that's the recap of what happened this morning. But if you were on the trial or already a member, you would have seen it all happen live in real time. So you can fix that today by A, becoming a partner and going to our passport holder to eminifuturestrading.com. If you've already had your free trial, this is where you go to get your passport. And if you've never taken the free trial, just go to trainingschool.com. Trading's not easy, but it really can be that simple. So let's take a look at the daily chart of the S&P 500. Now, yesterday afternoon, we had drawn in this little area here, and the market, if you look on a smaller time frame, you'll see it was quite a long time this area held as resistance. Finally, price, right before the close, poked up and touched that 50% reverse fib. Now, fibs you typically draw from the low to the high, but when you're in a downtrend, you draw from the high to the low. Works the same way, just in the opposite direction. So what's happened is from the low put in, or the high put in, the all-time historic intraday high put in on January 4th, to the most recent swing low put in on January 24th, price has managed to rally back above the 24% fib, back above the 38% fib, and we've tagged that 50% reverse fib both in yesterday's session and today's session, Tuesday, and we're building a doji right in this little area that we highlighted yesterday afternoon. Okay. Once the market hit this area yesterday afternoon, it was like it was stuck in mud. And then right before the close, it reached up, tagged the 50, and then reversed right back into that area. And that's kind of where we're still at today. So the obstacles overhead. Now, what we've got is a leg and a retracement, a leg and a retracement. So the question is, are we going to get another leg to the downside, or are buyers committed enough to continue pushing the market higher? Right above the 50% fib, we have the daily BBC, that stands for Bull Bear Cross. And the explanation of that is quite simple. When price is above the green line, the BBC, then we're bullish and we anticipate higher prices. When price gets below that green line, we're bearish and we anticipate lower prices. Now, when the markets are climbing and pull back to the BBC, we expect the pullback to hold until proven otherwise. The pullback holds more often than it doesn't. On this pullback, we consolidated for a number of days right at the BBC. And then we finally caught a leg to the downside. And then when the market retraced, it found resistance for 3 days right at the BBC. That's what we expect. On a pull back to the BBC, we expect support. On a pull up, we expect resistance. And that gave us another leg to the downside. Now, this low is tied to this low, which we've been highlighting now for several weeks, waiting for price to get to that point, and it finally got there on January 24th. And so now what's happened is we've bounced off of that area, that support area, and it sent us right back up to the area of the bullish cross, which became a very sticky area. It held as support, and then we got the big drop on a Sunday night. We rallied back up to that area. We got another move to the downside, and then we came back up. We actually spiked and hit the 38% reverse fib. Then we pulled back. We had a daily doji. The high of the doji was right in that area created by the bullish cross. And then on the following day, we opened here we ran down and put in a double bottom on the daily chart right here. And then we rallied up above that area. We've rallied up above the 38% reverse fib. And now price sits just below the 50% reverse fib and the daily BBC. In fact, price hit it almost to the tick and then reversed. Now again, on a reverse fib, we expect that to be resistance. On a normal fib, we expect when price pulls back, we expect the fib area to be support until proven otherwise. But with a reverse fib like this, we expect it to be resistance. And so far, we've had 2 days back to back where that 50% fib has acted as resistance. If buyers are committed enough to get us above the daily BBC, that could take a couple days, then the next obstacle overhead is the 62% reverse fib. Once we get through that area, we'll run into this old trend line here, which let me change that. There we go. And so once we overcome and the box doesn't want to close. Having some issues with the DT Pro platform. There we go. Okay. So if price can overcome the daily BBC, now the highest probability is that this will be resistance and will provide us another leg to the downside. Will it take us all the way to the most recent swing low, or will it just take us to this little double bottom here? Time will tell. On the other hand, if buyers are truly committed and get us above the daily BBC, then our next area where we expect there to be resistance is a 62% fib, which also lines up with the low of this daily candle right here. Then we have this old trend line, which could potentially be resistance. And then we have the bearish cross, just like that bullish cross back over there, right here. Provided all this activity here. If price can get up to this bearish cross, a bullish cross is where the blue line trades above the green line. A bearish cross is where the red line trades below the green line. So bullish cross, bearish cross on the daily chart. The larger the time frame, the more important the information it conveys. And while we don't trade off the daily chart, we use it to get our bearings to understand where the overall market is. Now, this is true not just of the S&P 500, but across all markets, all time frames. We got the 62, we got the trend line, we got the bearish cross. Then we have just above that bearish cross another obstacle at this double top, which is not just a double top, it's a triple top, it's a quadruple top. So the potential for that area, once we get through that previous bearish cross, for good reasons to find resistance here. If price can overcome that, then we have a window of opportunity that could take us up to the all-time historic intraday high. On the other hand, if buyers can't get through the 50% reverse fib and the daily BBC, we will have another leg to the downside. Will it be to the 38? Will it be to the 24? Will it be to 42.70? See, these two lows line up with all these daily lows right here. So that's a huge area for potential support. And then, of course, we have the most recent swing low put in on January 24th at 42.12.75. So that's the high altitude look at the S&P. So let's go now to the 30-minute S&P. Before we do that, we'll take a quick look at the Logic 247 alerts. We are in week 183 of Logic 247. That's our around-the-clock, 24/7 Emini alert service. The alert channel opens for business Sunday night at 6 p.m. Eastern and remains open until Friday afternoon at 5 p.m. Eastern when the global markets close. Alerts can come out at 2 a.m. or 2 p.m. It's whenever opportunity presents itself. We have traders around the world, so our day session is their night session and vice versa. So this week, week 183, since the markets opened Sunday night at 6 p.m. Eastern, we've had a total of 35 alerts issued. One never triggered. We're still waiting on the outcome of 15. We've had 19 actionable alerts, of which 2 or 11% would have been stopped out based on not risking more than $300 per contract, per trade, less when possible, using market structure and a very simple 3-step process that we teach all of our traders. Now, along with the Logic 247 alerts, and again, we're in week 183 of Logic 247, we still have our original alert service, the concierge trade alerts. The format for those are a little bit different. This is forward guidance for the entire session. And as opposed to coming out around the clock 24/7, this report is published each evening shortly after the Globex Open. Globex opens at 6 p.m. Eastern. The report was published last night at 6:20 p.m. Eastern. Now, we cover every market in the CTAs that we cover with Logic. S&P, Dow, Russell, crude, NQ, gold, silver, and the euro. If you want to grab a screenshot of these, you're welcome to do so. Now, the best way to handle this static report once it's published, because remember, the numbers are good for the entire session, and once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. So when the report is published last night, 6:20 p.m. Eastern, the markets you trade, you should make note of where price is in the markets that you trade at the time the report is published. Going forward, if price starts trending up towards 45.11, that's bullish. So our strategy will look for opportunities to be long the market. That's also where you'll use Logic 247 and everything you learn in the live training room to yourself find opportunities to be long the market. On the other hand, if price starts trending down towards 44.58, that's bearish. So our strategy will look for opportunities to be short the market, and that's where you'll use Logic 247 and everything you learn in the live training room to yourself find opportunities to be short the market. You don't have to wait for price to actually get, in this case, to 45.11. That's not a magic number. But once you understand our methodology and strategy and you understand how to read the chart, if price is above the VBC and is trending higher, then you use your smaller time frame to set up your trigger and your stop loss. In many instances, you'll have the opportunity to get your goal for the day before price even gets to the CTA number. Now, the CTAs are important prices, important areas, and when price reaches an important price, important area, just like a weekly trading zone, it can be rejected or price can soar through it. So you have to be on top of it. You have to be aware. You have to be monitoring your charts. It's not a set it and forget it type of methodology, because that's what those things are, methodology. Okay? This is active trading. This is you building your own consistently profitable trading business. That's our goal, is to provide you with the information and the tools that you need to build a consistently profitable trading business. So if you've had a chance to take your screenshot, we'll head off to the daily chart. Which we've already covered. We've got a little doji going on here right in this area that's highlighted. Okay. The BBC has been touched from below and got rejected. So buyers have a huge job on their hands. They have to overcome that 50% reverse fib and then the BBC before we can begin to think about the journey up to the 62% reverse fib, which again will be potentially good resistance. On the 30-minute chart, now this vertical line separates today Tuesday from yesterday Monday. The long CTA, the important price, important area, is 45.11. Okay. Now this is what I spoke about, how when price hits an important price, important area, it will often get rejected or sail through. This is why you have to be aware, watching your charts, monitoring your smaller time frame that you are executing on, whether it's a 4-tick range or a 5-minute, 30-minute, or one of the tick charts that many of our traders use, like the 1597 or the 610. So the trigger was 45.11, and it made it up to 45.14 and a half. So that's 3.5 points at $50 a point. 3 points at $50 a point. That would be $150 per contract traded. Price then got back below the trigger. Triggered again, just a little bit. And put in a high at 45.12.75. So that's 1 3/4 points. So while there was 2 profitable trading opportunities here, basically price got rejected. And when price gets rejected, it will pull back to the BBC. When price pulls back to the BBC, we expect it to hold. The pullback holds more often than it doesn't. We spent several hours consolidating at the BBC. Then we got above red and falling, and that turned red and falling into blue and climbing. That gave us another little trigger. It took us up to 45.14 and a half, so that's another 3.5 points. Then we got back below the trigger, triggered again, and that took us up to 45.15, which is 4 points at $50 a point. That's $200 per contract traded. So we had 1, 2, 3, 4, 5, 6 opportunities to be profitable off the long CTA. There was no trigger on the short side. Now again, this was the opening candle last night. It pulled back to the BBC, found support, made its initial rally, pulled back to the BBC, rallied again, pulled back to the BBC again, made another rally, has now pulled back to the BBC, and could potentially rally and trigger again. Now, while each one of those triggers were profitable, none of them made it to the final trade to target. On every alert, whether it's a Logic 247 alert or a concierge trade alert, the final trade to target is always on a long, the weekly zone above, and on a short, the weekly zone below. Now yesterday, because it was Monday, we still had last week's zones on the chart. Now we have this week's zones on the chart. So price pulled back. The zone is 4470/4471. So we pulled back, but we never lost touch with the BBC. And so even though we spiked it, it ultimately held and sent us higher. So we've just had a lot of sideways consolidation going on since the London Open. This was the candle where London opened last night. And from that initial pop on the London Open, back to the BBC, back to the CTA, back to the BBC, back to the CTA, back to the BBC. Now, if this pullback holds, we'll get another long trigger at the CTA. If this pullback fails to hold, and that means price closes below the BBC on the 30-minute chart and then opens. See here, we spiked it, but we didn't. We closed above it. We opened, but then we closed right back above it. So what we need is an open and a close below it to be able to say the pullback has failed to hold, and then we start looking for opportunities to be short the market down to the weekly zone below, which is 4470/4471. We've published the zones since December 14th of 2009. They come out Monday morning, 6:15 a.m. Eastern. That gives all of our traders plenty of time to get the zones on their chart before Wall Street even wakes up for the week. So that's the story on the ES. On the Dow. $35,045. Now right here, this was the closing candle for Monday. This was the opening candle last night. Even though it was Monday night, 6 p.m. Eastern, this candle was the beginning of the Tuesday session. And so it found support right at the weekly trading zone. Here we spiked below it, pulling back to the BBC. We didn't quite make it all the way to the BBC, but again, the pullback holds more often than it doesn't, just like it did here, and here, and here, and here, and here. It's really important to remember that. On the 30-minute chart, the pullback to the BBC will hold more often than it doesn't. Okay. So from the long CTA, 35,045, we put in a swing high at 35,099. So now we'll just call it 45 points. It's a little more than that. So 45 points at $5 a point, the market made $225 per contract available. And then we got back below the trigger, found support at the weekly trading zone. That's what we expect. When price drops to the zone, we expect that to be good support. It was. Took us back up to the trigger, and we put in a swing high at 35,106. So 35,106 minus 35,045, the trigger, at 61 points, at $5 a point, the market made $305 per contract available. If you've earned the right to trade 2 contracts, then that's $600. If you've earned the right to trade 10 contracts, that's $3,000. Okay. Price pulls back, spikes the BBC right to the weekly zone, which holds as support. Sends us back up for another run. Now we only want to take long trades if we've got blue and climbing on the chart. And so the swing high right here is 35,078. So 78 minus 45, it's 33 points, $5 a point, $165 per contract traded. Once you earn the right to trade 10 contracts, then that's a $1,600 per contract move. But when you first get your passport, you don't go live right away. You show up for class, you follow along, you ask lots of questions, you learn the methodology, you learn the strategy, you trade in your simulator until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. That lets you know you're ready to trade live. The 2420 blueprint will notify you when it's time to go live based upon you putting together those 10 consecutive days in a row. But when you go live, you only go live with 1 contract. Once you go live, then your goal is to increase your account balance by $2,000. Once you've increased your account balance by $2,000, then the blueprint will give you the green light to add a second contract. Adding the second contract is a huge deal because it shows that you're on your way to building a consistently profitable trading business. The first contract has to be funded with your startup capital. The second contract is funded with profit you earned in the market. The blueprint will notify you when it's time to add contract number 3, number 4, number 5, number 10, number 20. But you only add one at a time when it's time, and you only add with profit you earned in the market. If you follow the blueprint, it makes it not impossible, but very difficult to blow up an account or blow up another account or blow up yet another account. It requires patience, it requires discipline, and you have to put forth the effort to learn the methodology and the strategy. The methodology and the strategy are very simple, but you can't just show up for class and watch Michael or Valerie put on and take off trades like you're watching TV. That's like trying to learn through osmosis. Just doesn't work. You have to be actively participating in your own education. You do that by 2 ways. Number 1, asking lots and lots and lots of questions. And number 2, trading along in your simulator. Okay. So we're just about, it looks like, ready to trigger again. We've got price directly above. We've got blue and climbing directly above price. And that can be resistance. See what just happened? See what happened on the previous candle? Okay. Now, on this pullback, the BBC will either hold as support or it won't. The pullback holds more often than it doesn't. So right now you have to be patient and wait and see if the pullback is going to hold. We're 3 minutes, only 3 minutes into this candle. So when we get the next 30-minute candle, if it starts printing green, again, most likely the pullback held, and you'll get another chance to trade along on the upside. On the Russell, the long CTA was 20.29. All right, so the initial touch of the CTA number was 20.30. So 1 point, 10 ticks. Price then pulled back to the VVC. The pullback held. Holds more often than it doesn't. We trigger again. This time we run up to 20.3270. So that's 3.7 points. It's almost 4 points, but we'll call it 3. $50 a point, that's $150 per contract traded. Then price pulled back to the VVC. And even though we spiked it, we closed right back above the BBC. And so this trigger from 2029 took us up to a swing high at 20.4390. So we'll call it 20.43. That's 13, that's 14 points. $700 per contract traded. Now that doesn't mean you have to try to take $700 out of the move. Simply means it's an opportunity for you to reach your goal for the day. Price then pulled back to the BBC. The pullback held. It holds more often than it doesn't. And we popped in the swing high so far. Is 20.4050. We'll call it 20.40. That's 11 points, $50 a point, $550 per contract traded so far. Okay. All right, we've covered the S&P, the Dow, the Russell. Here comes the NQ. Okay. So this was the opening candle last night, right at the zone. We dipped just a little bit below it, but basically it held as support. We get blue and climbing. Up we go from 928. We put in a swing high at 952. So 52 minus 28. It's 24 points at $20 a point. It's $480 per contract traded right there. Then we get back below the trigger. We trigger again. We put in a high at 965. So 965 minus 928. 37 points. $20 a point. $740 per contract traded. If you've earned the right to trade 10 contracts, that's $7 grand, $7,400. But don't put the cart before the horse, because that's awkward for the horse and the cart. Okay? You have to look at this as a business. Okay? Not a weekend junket to Vegas. You're building a business. Okay? It's very important that you follow the blueprint, that you write your business plan, that you write your trading plan, and that you stick to it. Mark Douglas in Trading in the Zone wrote, trading perfection is just simply knowing what to do, when to do it, and then doing it. And that's what we help you do. So that was the first trigger. Then we got back below the trigger. We triggered again. And we ran up to a swing high of 965. So 65 minus 28. 37 points, $20 a point, 740. That's the one we just did. Okay. So we get back below the trigger. Notice how the BBC holds the support. Sends us back up again. This time to 960. So that's 32 points. We'll call it 30 points, $20 a point, $600 per contract traded. And then we get back below the trigger. We get above red and falling. We trigger. And we put in a swing high at 42 half. So we'll call it 42. $14 points, $20 a point, $280 per contract traded. If you've earned the right to trade 10 contracts, it's $2,800. Then what does price do? It comes right back to the weekly trading zone, consolidates. Right now, we're just below the BBC. Here's red and falling, turning to blue and climbing. So if the zone holds the support as it held here and here, now we spiked it real good here. Ultimately, it ended up holding and sent us back up to the trigger. So I would be cautious here, but if price trades 14,912, you could have your points and then some by the time you hit the trigger at 28. Okay. All right. Next is crude oil. We got two-sided action on crude. We are in the H contract. Okay. So 88.45, the initial trigger took us up to 57. We'll call it 55. It's $100 per contract traded. And we got back below the trigger, but right here, you got red and falling, and you want blue and climbing on a long. From the actual trigger to the swing high, 88.55 is another $100. And we come down, we get a bearish cross. We trade through the weekly trading zone. We hit the short trigger at 87.30, and that takes us down to a swing low of 87, we'll call it 05, $250 per contract traded. And then we get below the trigger again, and this time we drop all the way down to 86.55. At $750 per contract traded. Then we get back above the trigger. We drop again. And from 87.30 to 87.05, that's $250 per contract traded. Then we get back above the long trigger. And from 45, we make it to the target at 65. We go beyond that, we spike it. But the trade to target was 65. That's $200 per contract traded. Gold, we're now on the J contract. No trigger on the short side. $18.05. Is that right? No, it's not. Let me double check that. Gold, the long trigger was 1796. I didn't think that looked right. I think there may have been a typo. I think that should have been 1806. So we'll give the benefit of the doubt and go with 1806, which took us up to a swing high at 1809. That's $300 per contract traded. And then price pulled back to the weekly trading zone where it found support, got rejected, sent it back up to 1806, and we put in a swing high initially of $190 per contract traded. We got back below the trigger, triggered again, and the swing high was 1808.60, so $280 per contract traded. On silver, 2 pennies is $100. Trigger is 22.91, so let's get that right. Okay, so from 22.91, we traveled up to 92.5, so that's 1.5 points. 2 pennies is $100. Then we got back below the trigger, and the market took us up to 23.06. So that would be 15 pennies, or $750 per contract traded. And then back below the trigger, and we get one more trigger on the long side, which takes us up to 23.01. That's $500 per contract traded. Now price has pulled back below the BBC, And it looks like it wants to travel down to this weekly trading zone below. And right at the weekly trading zone, we've got a bullish cross. So if we continue to drop, we can anticipate a nice window of opportunity right here. From 22.58 down to 22.50. It's 8 pennies, $400 per contract traded. And last but not least, the euro. Long trade on the euro was 11.2640. The initial swing high took us up to 785. We got back below the trigger. Triggered again. The market took us up to 885. And then here we got below the trigger. But the issue here, not all triggers created equal. We got red and falling overhead, which represents resistance. And as you can see, it was resistance. And it took us right below the trigger. Now, price could go sideways for a minute, or a few, which will turn red and falling back to blue and sideways, then blue and climbing. Or we could trigger from right here, okay? Just know that red and falling's in the picture. That represents resistance. So you might want to consider your entry a little above the CTA. Something a little more like 11.2670. Just to be cautious, because if price trades up to 11.2670, that's going to turn red and falling back to blue and climbing. And that brings us around the world, all the way back to the daily chart, where buyers and sellers are still duking it out at the 50% reverse fib. That's from the high put in January 4th to the low put in January 24th. We're at the 50% reverse fib. If there's going to be another leg to the downside, there could not be a better spot for it than right here. The surprise to the upside would be that today's session closes above the daily BBC, which also puts it above the 50% retracement. And then the next obstacle overhead is the 62% fib retracement. Okay, time now for our good word for the day. If you don't, yesterday we talked about no turning back. We remember that Lot's wife, she turned back and turned into a pillar of salt. If you don't have your lifetime all access pass to everything we do, everything we've ever done, and everything we do in the future, if you don't have that yet, go to eminifuturestrading.com. Couple mouse clicks, and you're a passport holder for life. Never expires. There's never any additional fees. No weekly, monthly, nothing. Okay? One money, one price. That's it. Okay? Now the price of the PAT, because we're adding new stuff to what we offer, well, you see it every time, even you go to the grocery store. I mean, inflation's everywhere, but this isn't inflation because we've kept our prices considerably low for a very long time. In fact, we had a discussion about that last night. We got to keep up with the world. And so with all the new stuff we're adding to the passport, it only makes sense that the price of the passport itself has to increase. But we've not increased it yet. So if you want access to everything we do, everything we've ever done, and everything we do in the future with no additional charges, no price increases, No nothing. Then go to eminifuturestrading.com. Get your passport today. If you have questions, call Valerie 949-42-EMINI or email support@cfrn.net. You can be a passport holder today. You can be set up and ready to go live with us when the Globex markets open tonight at 6 p.m. Eastern. We've done everything we can to make it as simple as possible and to provide you with as much value as possible. You've got a living, breathing teacher, 2 hours a day, every trading day, putting on, taking off trades live in real time, right in front of you, explaining every move, every trade, and the rule behind it. Along with that, you have access to unlimited one-on-one private mentoring. We teach you our proprietary methodology and strategy, which works not only with futures, but with stocks, cryptocurrencies, Forex, options. You own the indicator set for life. You receive the Logic 247 alerts around the clock. You have access to the concierge trade alerts every single night when the static report is published, which is forward guidance for the entire session. And you have access to the exclusive members-only workshop every Thursday night. All that is yours when you pick up your passport. Our good word for today is about relationships. We're all in a relationship of some kind of another, whether we're married or not married. We have relationships with coworkers and fellow churchgoers and neighbors. Everywhere you turn, you're in relationship with somebody. Amos 3:3. You don't hear a lot of sermons preached out of Amos. I'm not going to preach a sermon, but the scripture in Amos 3:3. Can two people walk together without agreeing on the direction? Now think about that for a moment. Can two people walk together without agreeing on the direction? Well, the obvious answer is no. Having the right relationships will help you to soar in life. They're like the wind beneath your wings. But the wrong relationships will drag you down. They're like a ball and chain around your feet. To know which relationships are good for you and which are not, here are 3 guidelines. And again, this is part 1 of our discussion on relationships. Number 1, we've got 3 guidelines today. Number 1, when a relationship is not working, for whatever reason, acknowledge it. Sometimes you just have to cut your losses. The old saying goes, when you're in a hole, stop digging. Accept the fact that sometimes your efforts are not enough and that you can't help everybody. Releasing someone doesn't mean they will never get better. It just means that God is more qualified to help them than you are. Guideline number 2. There's a difference between helping someone and carrying them. This is particularly so when you're dealing with a person who always turns to you for help and tries to make you feel guilty when you're, quote unquote, not there for them. Don't try to be someone's God. Your constant help may actually be a hindrance. You have become a crutch and an enabler. Step back and let them learn to walk on their own. I spent a lot of time, a lot of years in inner city ministry. doing my very best to help the unemployable, those coming out of prison, those trying to get off drugs, alcohol, whatever the issue was. That's what our whole company, and it was a for-profit company, but it was generated and created with God's guidance and His hand to help those who had fallen through the cracks of society. And it was a tough lesson for me to learn because I'm a fixer. If something's broken, if something's wrong, I want to fix it. And I kept having the same recurring problems with the same people. And in prayer, the Holy Spirit spoke to me and said, every time God has brought them or is bringing them to their knees, you slide a chair up under them. I was trying to be their God. My mistake, my bad. I admit it. I see it. It's crystal clear now. But back then, I thought I was doing the right thing. Your constant help may actually be a hindrance. You can become a crutch and an enabler. And that's exactly what I was doing. Step back. Let them learn to walk on their own. It's just like you teaching your kid to ride a bicycle. They're going to have to fall and scratch their knees a couple times. Okay? As a parent, it hurts. It's painful. You don't want it to happen. But it's what ultimately teaches them how to keep their balance, how to ride that bicycle, and how to stop falling. Guideline number 3. Don't allow your fear of criticism to restrain your common sense. Here's a fact of life that you must learn to live with. Not everyone is going to be pleased with you. We talked about this a couple weeks ago about, our desire to be people pleasers. Not everyone is going to be pleased with you. End of story. The truth can hurt and often alienate, but guess what? It's still the truth. Facts change, but truth never does. There are times when you must tell it like it is and accept the consequences and the disapproval. The only way to avoid criticism is to always say what everyone desires to hear, which is equal to living a lie in a relationship. Whether it's your spouse, your boss, your employee, or your neighbor. That's part 1 on relationships of our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.